Last year, the Canadian Revenue Agency introduced pension income splitting. This could save Canadians thousands of dollars, but there are some conditions. Here to talk to us about it is Cleo Hamel, who is a Senior Analyst with H&R Block Canada. Hi, Cleo.
Hi.
So tell me how this all works.
Well, let's consider someone who wants to take advantage of this. Typically, we're seeing that seniors today are from a generation where one person worked and one person stayed home, which means that the one that is working is collecting all of the pension. Well, now, when they're receiving it and they're paying tax on it, they're being taxed at their own personal tax rate on that whole income. What pension income splitting is doing is it's going to allow the higher income earner to transfer up to 50% of that income to their lower income earning spouse, thereby sharing the tax burden. And an example would be someone who earns $50,000 in the year would be taxed at a federal rate of about 22%. But now with income splitting, if they can transfer up to $25,000 of that income to their lower income earning spouse, both people are being taxed at 15% and saving essentially about $2,200 minimum on that income split.
So you can save quite a bit of money. How do I get on that train?
Well, first of all, you have to be receiving an eligible pension. So an annuity from a RIF or a superannuation, it's got to be a retirement income. Second of all, you have to fill out a form. Both you and your spouse have to fill out a particular form that says you want to take advantage of income splitting. You submit that with your tax return, and voila, there you go.
Are there any drawbacks to this?
Well, something you do have to consider, some of the credits that are available to Canadians are medical expenses, for instance. And the general rule is the person who makes the lower income should take advantage of a medical expense deduction because it allows them to maximize their medical expense credit. But when you're both making the same income, you may lose the ability to take advantage of medical expense credits. However, if you're saving $2,200 in tax versus maybe being able to claim about $1,000 in medical expenses, you have to weigh which one brings you the better advantage, and I would guess most people will choose the income splitting.
It sounds a bit catchy, so how do I find out more information about this?
This is a catchy issue. It is relatively new. People are still learning about it, so you should speak to a tax professional and make sure you understand exactly what the implications are going to be for you.
I guess, or visit hrblock.ca.
Correct.
Thank you very much.
Thank you.